Going over the portfolio results for August of 2021, it was our worst month of the year so far. Very challenging month, very challenging market environment. Felt like a summer choppy market environment, and we had some worst case drawdowns, especially on the terrorist attack on August the 26th was a tough day in many ways. Around the world is a dark day in the world, and it was a dark day in trading. And let's go over those results. All strategy access 78, down 77.30 on the month, and this made a worst case drawdown with a lot of chop, but it had some big days to recover. So it's come back a long ways, made those new worst case drawdowns, and this is for a large portfolio, 500,000 to a million. If you trade this with $1 million portfolio, you're looking at some good returns. You have to risk, about 7% of your portfolio, $68,000 drawdown, and to buffer it for worst case drawdowns, because it could make worst case drawdowns in that in the future as volatility increases and we make adjustments. But if you look at this, 23%, 45%, 22.9%, 45%, 24%, if you're trading this with $1 million portfolio, that's the opportunity. You start on a drawdown like we're in now. It's at $27,000 drawdown. It would be a 4.1% move to a worst case drawdown with $1 million. So this is a large portfolio. Not everyone has $1 million to trade. And let's look at some of the daily results that we saw. So we saw a new largest winning day last month. There was a day where there was a $36,000 day on July the 20th. And it made another new equity peak on July the 26th. And then we entered this long choppy time period where it made a new worst case drawdown. This one made a worst case drawdown on August the 19th. Some of the other portfolios made a worst case drawdown on the terrorist attack on August the 26th. And so since August the 19th, up 10K, up 21K. These are some of the big days. One of the big days, plus 19K, plus 10K to end in a $27,000 drawdown. So lots of big swings in equity in this. Let's go over the portfolios. I'm going to just skip down the 200K and 50K because most of you trade the 200K and 50K. Then we'll come back to the others. 200K portfolio is, it was down. We switched on August the 16th, so we'll go over the transition of that. We'll go over each portfolio separately and then the transition as well. This one was down 13,891 on the month, down at 20,434 out of 22,836. Made a new worst case drawdown. The old worst case drawdown was around what was it, 18,000, I believe. Let's look at the chart to see. The portfolio we were trading had a $20,000 drawdown. Then we reduced our risk, and it still made a worst case drawdown. So 16,982 right here, and then this one was 15. And so we are at higher index levels. Let's look at this, how this progressed. And so we made our last equity peak on July the 26th, and then this worst case drawdown came in here on August the 26th, terror attack, 22,836. We were in a 1446 drawdown, and we had an 8350 day. It was as a terrible day, and we've had 3 positive days. This is the weekend. These are weekends. So we had 3 positive days since then to the end of the month. And so those are the results going to the end of the month. Ended down 2434. Let's look at the portfolio we transitioned from. The portfolio we transitioned from was trading with a $20,000 drawdown, and we removed 2 momentum strategies, and we added 1 counter trend strategy. So let's look at this 200K portfolio through August the 13th. That was a Friday. We picked up a new portfolio on August the 16th. It was down 10,626. Ended down 15,579. Its old worst case drawdown was around 20,000. It made a worst case drawdown by about 2,500. And the bounce back the portfolio we transitioned from actually did better, and so we would have been better off staying with that. But we were trying to minimize our risk because one of the strategies that we had was just severely underperforming. And then they actually did well going into the end of the month with these NASDAQ rallies. And so 759.40 was where the drawdown ended. You can see the new worst case drawdown was made. This one was down 7,500 on August 26th, and it had some big bounce back days on August 27th, the 30th, and it made its last equity peak on July the 26th, like the other, and then just a choppy month in August. And one of the things that you have to consider is, if you're not trading this, you would love to get in right now. And without this worst case day, you're just in a normal down month, a normal drawdown, without this terrorist attack day. It's hard to model geopolitical events, and so that's one thing to keep in mind when you look at this. The 50K portfolio is also down on the month, one of our strongest portfolios. 10 strategy portfolio, it was down 36.15 on the month, in a 63.50, 7.50 drawdown. If you want to get in on a portfolio, if you're trading this, oftentimes keep in mind if you're trading this and it goes into a drawdown, sometimes you feel like quitting because you don't like drawdowns. And then if you weren't trading it though, you'd want to jump in here and get in on this drawdown. So you have to keep that in mind. Do you want to quit at a time when you would normally want to get in if you weren't already in it? So that terrorist attack really threw us, and the choppiness of August really threw us. And so I don't see August as a normal trading month. Now I could be wrong. Going forward in the future, we could have August could be the new normal. It's possible that any given month could be the new normal, but we often see times where a really unusual type month just changes at the beginning of the month. And so we're in a drawdown, and we're at a new month. And so typically, I used to not like summer trading, and then in recent years, summer trading was better. But this year, the end of July, very end of July and August became a typical difficult summer trading period, and so did not like August at all. Glad to be done with it and ready to move on. We're going to go over the micros, and we'll back up over here and go over the rest of these portfolios. Micro portfolio aggressive. We changed this one as well, or no, we changed the conservative because the conservative matches the 200K, and so the 200K and the conservative micro portfolio were changed, but this was not changed, and it was only down 167.25 on the month. It's used to having, if you're trading a micro portfolio, this is a pretty good setup to trade if you have limited capital. Being able to make over 1,000 a month. Some months it does have down months, and there's risks and there's drawdowns, but some of these winning months are over 1,000, some over 2,000, and then rare months over 5,000, which is good considering the amount of capital you're working with when you trade micros, and so you can limit your risks. This is 1/10 of the E-mini S&P, E-mini NASDAQ, with that uses 25 round turn slippage and commission, so your results can sometimes be different on the micros because those don't always trade tick for tick. Sometimes you're stopped out in the micros, but not the E-mini, and vice versa. Sometimes your results can be slightly better, sometimes it can be worse, and it won't match exactly on the micros. So that's the aggressive, the conservative. Conservatives in a good place to start as well, 1807. Now this matches the 200K portfolio for the ES, NQ, gold, and crude oil. And so we made the change in the 200K, so we made the change in the micro as well. And it doesn't have as many strategies because we're not trading silver and soybeans because those don't have 1/10 micro contracts, RBOB. And so this is the conservative, down 1140 on the month. Good place to start some of these portfolios, 1807.25. And this one also made a worst case drawdown by a little bit. So the worst case drawdown is back here, almost 2,000, then it made it 2,200. So you have to anticipate worst case drawdown, start on a drawdown looking for a bounce. And all strategy access 78, we went over that. Now we're going to back up and go to these other three that we haven't gone over yet. We skipped over those. And all strategy access shortlist 51. This one made a worst case drawdown and closed the month near a worst case drawdown, down 15,769.40. And you can see it's had a strong year. A lot of these have had a strong year, and then August was just different and difficult. And let's go over this. So looking for a bounce back, looking for a return to normalcy. Don't anticipate that the August market environment will be the new norm. All strategy X says 51 plus 7 new. Now this one did not make a worst case drawdown. It held its worst case drawdown. Let's go down here and look. This gave you a nice entry point if you were watching this Almost transitioned the 200K portfolio to this one back here when it was near its worst case drawdown back here. It's bounced some. It's hard to transition things quickly on a intra-week basis. You almost need a weekend to adjust everything. On a Thursday, one Thursday, this was a good time to adjust. Back on the 26th, it did not make a worst case drawdown. This would have been a good time to switch into this portfolio, potentially if you had a 200K account, and if you have the All Strategy Access, you have the flexibility to do that. So down 14,819, up on the year, having a good year but down month. Get in on those drawdown opportunities. And then the stock index portfolio did well actually. 39.52.50 on the month. It was the one winning portfolio was the stock index portfolio 27. I had talked about potentially removing this portfolio because of diversity. It doesn't have as much diversity, but I'm going to go ahead and keep it because it did so well this month. And sometimes you might just you can go with methodology diversity. If you just want to trade stock index portfolio strategies, you can do that. It actually performed well this month. Up on the month, held the worst case drawdown and bounced back. And so this gives you an idea of, gold really gave us a difficult time in August. And so we talk a lot about the indexes, but the indexes aren't always the issue. Sometimes other months like crude oil and gold, which were all over the place. And I haven't broken down the results in the 200K portfolio by market, but this is kind of indicative that the stock indexes weren't really that bad overall in the month of August. What we did see, though, was gold and crude oil, very challenging markets to trade. So those are all the strategies that all the portfolios that we're currently tracking. You can always go back and look at some of the old portfolios. But these are the results for August of 2021. The terrorist attack set us back. The stock index portfolio ended up on the month. And if you're trading one of these other portfolios, you have a good opportunity to get in on a drawdown starting at a discount. New month, starting on a drawdown has been one of the best entries that we've seen in starting live trading in a portfolio.